There is a specific moment that arrives for a lot of people somewhere in their late 30s or mid 40s. It is not a crisis, it is quieter than that. You are sitting somewhere ordinary, maybe waiting for a meeting to start, maybe lying awake at 2 in the morning, and a thought surfaces that you quickly push back down. The thought is this: I have been working for over a decade. Where did the money go? Not in accusation, just in genuine, slightly unsettling confusion. You earned it. You spent. Life happened. And somehow, the distance between where you are and where you assumed you would be by now is wider than you ever expected it to be. My name is Anderson, and I want to spend the next few minutes talking about the system that closes that distance. Not a complicated system, not an aggressive one, a minimalist one. The kind that works precisely because it asks less of you, not more. The kind most people walk past for years because it does not look impressive enough to take seriously until the day they realize time was the one resource they could not recover. Here is what most people believe about building financial security. They believe it requires a higher salary. They believe it requires a sophisticated investment strategy. They believe it requires a specific kind of financial literacy that takes years to develop. And so they wait. They wait for the raise that will finally make saving feel meaningful. They wait until they understand the market well enough to invest confidently. They wait until life settles down enough to focus seriously on money. Here is the contrarian truth. The system that builds lasting financial security does not require any of those things. It requires one thing only, and that thing is starting before you feel ready. Because the entire architecture of this system is built on time, and time, unlike income, cannot be earned back. The invisible threshold in this conversation is not a dollar amount. It is a decision point. There is a moment available to every person, usually in their 20s or early 30s, though it can come later, where the choice to implement a simple, consistent financial system would set compounding in motion that essentially completes the work on its own over the following decades. Most people do not recognize that moment when it arrives. It does not feel significant. It feels like a small, boring administrative decision. Open an account, set up an automatic transfer, choose a basic diversified fund. That is it. That is the entire system in its most essential form. But the people who take that unremarkable step at 26 or 29 or 32 cross a line that quietly separates two completely different financial futures. On one side of that line, time is an asset working for you. On the other side, time is a debt accumulating against you. Before crossing that line, financial life has a particular quality of exhaustion to it. Not dramatic exhaustion, the quiet, grinding kind. Every month feels like a reset. Income arrives, obligations consume it, and the net position barely moves. Decisions are made under a low but constant pressure that distorts judgment in ways that are difficult to detect from the inside. Small expenses feel like they matter enormously because there is no underlying foundation to absorb them. Larger decisions, whether to change careers, whether to move, whether to take a calculated risk on something promising, get filtered through financial anxiety rather than genuine strategic thinking. The mind is busy, not productively busy, defensively busy. Constantly calculating, constantly bracing, constantly managing the gap between what is coming in and what needs to go out. After crossing that line, even modestly, something genuinely shifts. The foundation does not need to be large to begin changing the texture of financial life. A growing account, even a small one, produces a psychological effect that is disproportionate to its dollar value. It signals to your own nervous system that the future is being addressed. That signal reduces the background noise of financial anxiety. Decisions become cleaner. The same career question that once felt terrifying because it involved income uncertainty becomes a genuine strategic evaluation when there is even a modest cushion beneath it. Mental bandwidth returns. And returned mental bandwidth, applied consistently over years, produces compounding results in every area of life, not just financially. Let the numbers tell the story simply. A 24-year-old who directs $250 monthly into a diversified index fund, averaging 7% annual returns, will have approximately $680,000 by age 65. They did not need a high income. They did not need to understand options trading or market cycles or macroeconomic theory. They needed one decision maintained consistently for 4 decades. Now consider the person who waited until 38 to begin the same behavior, same contribution, same return. By 65, they have approximately $220,000. The difference between those two outcomes is not skill. It is not income. It is 14 years of time that compounding could not recover. That gap, roughly $460,000, is the true cost of ignoring this system until it feels urgent. And it almost always starts feeling urgent too late. Something happens to your identity when you implement this system and maintain it long enough to see it working. You stop relating to money as something that controls your options and begin relating to it as something you direct. That transition is subtle but profound. The person who has been consistently investing for 5 or 6 years, even in modest amounts, carries a different relationship with their own financial future than someone who earns more but has no system underneath their income. Self-trust develops. Not the fragile confidence of someone who has been lucky, but the durable confidence of someone who has demonstrated to themselves repeatedly that they can commit to a long-term plan and follow through. That quality demonstrated financial self-trust changes how you make every subsequent decision. You become someone who thinks in decades. And people who think in decades make categorically better financial choices than people who think in months. Here is how the same external event registers differently depending on which side of this threshold you are on. An unexpected medical expense arrives. For the person without a system, without a foundation, this is a genuine emergency that requires immediate restructuring of everything. Stress floods the decision-making process. The response is reactive and expensive, sometimes debt, sometimes liquidating the wrong assets, sometimes simply absorbing the hit in ways that set back progress by months. For the person who has been operating a simple minimalist financial system for several years, the same expense is serious but contained. The emergency fund exists specifically for this. The investment account is untouched. The monthly system continues running automatically in the background. The disruption is real, but it does not cascade. That is the difference a system makes. Not the elimination of difficulty, but the containment of it. This is where the nature of your financial attention shifts permanently. Once a genuine system is running, the questions that occupy your thinking change character entirely. You stop spending mental energy on whether you can afford small things and start applying genuine thought to decisions that actually shape decades. The neighborhood you choose to live in and whether it is building or depleting your financial position over time. The career trajectory you are on and whether it reflects your actual values and strengths or simply the path of least resistance. The way you are allocating your growing assets and whether that allocation is aligned with your real time horizon. These are leveraged questions. Answering them well produces returns that dwarf any savings you could generate by optimizing daily expenses. Career leverage arrives quietly alongside financial foundation. There is a negotiating posture available to someone who does not desperately need the specific outcome of any single professional conversation. It is not aggressive. It is simply calm, unhurried, grounded in a clear understanding of their own worth that does not require external confirmation to remain stable. When your financial system is running and your foundation is genuinely growing, the professional anxiety that once made you accept less than you deserved, stay in environments that were costing you more than they were paying you, or avoid risks that your actual skills justified, taking that anxiety loses its grip. You negotiate differently. You evaluate opportunities differently. You walk away from misalignment differently. That shift in professional posture compounds over a career in ways that are almost impossible to fully calculate. Now, I want to say something carefully, because this is the point where people most commonly undermine themselves. The system working is not a signal to reward yourself by expanding your lifestyle to meet your growing income. That impulse is natural and it is dangerous. Every time you expand your fixed monthly obligations in response to financial progress, you raise the floor of what you require to feel stable. You push the threshold further away. You reduce the margin that the system was quietly building. A vehicle upgrade that adds a significant monthly payment does not merely cost that payment. It costs the compounding that payment would have generated over the following 20 years. A housing upgrade driven by the feeling that you now deserve more space does not merely increase your mortgage. It increases your minimum viable income, which directly increases your vulnerability to any disruption that affects that income. The system is a foundation. Treat it as one. Build on it deliberately, not impulsively. Every major spending decision made during the years when compounding is doing its most powerful work carries a cost that does not appear on any price tag. It appears in the options that will not exist 10 or 15 years from now because the money that could have generated them was spent on something that no longer exists either. That is not a guilt trip. It is just the math of time, stated plainly. The trade-off is real. Knowing it exists does not mean never spending. It means spending with full awareness of what is actually being exchanged. The minimalist money system is not complicated. It does not require sophistication. It does not require a high income, perfect timing, or extraordinary discipline. It requires one decision, implemented simply and maintained quietly over time. The people who ignored it until it felt urgent almost universally wish they had started when it still felt optional. Because that is the nature of time as a financial resource. It is most powerful precisely when it feels least necessary. My name is Anderson. The window has not closed for you, but it is moving. And the version of yourself that exists 25 years from now is already living somewhere in the consequences of what you decide to do with that window. Design that future deliberately. Start before you feel ready. Maintain the system even when it feels invisible. And one day, in some ordinary, quiet moment, you will check an account balance and feel something you did not expect, not excitement, but deep, settled relief. The kind that only comes from having built something real. Thanks for listening. I will see you in the next video.